Hi, good afternoon, Ivana.
Okay, very nice to have you here with us.
Yeah, so do I.
And for those of you who are currently online, before we start this Budget 2016 online masterclass with Cheng, I'd like to do a sound check, okay? If you can hear us, can see us, please type in the chat box. AV, okay. I'm from where? Your location. Can you do that? Can you type in the chat box? Let us know. AV, okay. I'm from where? Before we proceed. For those of you who are online, you can hear us. We need feedback before we start to make sure you can hear us. Yeah, Ken, hi. Ken from KL, hi. Yeah, everything okay? Hi, Jeffrey from Penang. Yeah, good. Good to hear that AV is okay. Okay, so this afternoon, we are going into budget 2016, and I believe, Cheng, there's a lot of newspaper article or a lot of talks or a lot of seminars out there that is also talking about budget. But our online masterclass is different. We focus mainly to talk about the business side. Right, Cheng?
Yes. We concentrate on business, rather than the individual. But of course, let's say if we have time, maybe let's say we can flip through the individual, but mainly focus more on the business, mainly on business.
Yeah. So for those of you, if you have maybe read this Budget 2016 somewhere or attend any seminar, this online masterclass is a bit different. We only focus on business. So without further ado, I would like to change the floor. Okay, to Cheng, share Cheng's screen so that Cheng, you can start presenting. I'll mute myself. Okay. I'll mute myself. So.
Can you see, Ivana? Can you see my screen?
Can.
Okay. Okay.
I'll mute myself. You can continue on presenting, and the Q&A will be the last 15 minutes, which is around 3:15. We will have Q&A session.
Yeah, sure.
Okay. Go ahead.
Okay. So good afternoon, everybody. My name is Cheng. Okay, let's start. Okay. Today the title actually is Budget 2016. Actually, the official title for this Budget 2016 is Prospering the Rakyat. Okay, so as Ivana mentioned just now, we will focus more on business, okay, rather than the individual. Okay, so let's start. So the today content will be split into altogether. Actually, there are 3 sections, but I will cover many more on the A and B, and also up to 3 or 2 and 3 here. But here, let's say we have time, we can go into it. Okay, so let's start. Okay, some facts before we start the budget. Okay, so I think we read the newspaper and internet or whatever new information that we know. 2016 budget is one of the toughest budget, okay, that our current government face. Okay, one of the main reason is, I think we all know also, Malaysia facing a lot of challenges lately. Okay, one of the key challenges that we face is the ringgit depreciate. So ringgit depreciate 21.4% for the past 9 months in 2015. Okay, so of course the ringgit depreciate is due to the world economy soften. Okay, especially Europe. Okay, China. Okay, before that I just elaborate a little bit. In December, just to extra point for you guys, U.S. interest most likely will increase. Okay, U.S. interest will increase, then it will impact that U.S. dollar will strengthen. Okay, once U.S. dollar strengthen, our ringgit will further depreciate. Okay, so that means in December, our ringgit will be one more time being hit, okay, in the short term, okay, because after US interest rate increase, short term, then there will be this kind of impact, okay, and then the share market in US will be weakening, will be weak, or there will be drop, okay, and the Malaysia will expect will be follow, okay. So this is the new the update for the latest development. I'm trying to bring it out. Is like the ringgit depreciate now is considered very bad already. There will be a further depreciate, after the US depreciate. So I will suggest those in December time go for overseas trip. So perhaps before the US interest increase, perhaps you can change your overseas currency right now, because we expect that it will further depreciate of our ringgit. Okay, overall the currency, not only Malaysia ringgit depreciate, overall other currency will also depreciate. The range is 7.3% to 19.4%. So overall depreciate is about this range, but Japanese yen dropped very close to us. It's 21.1%. Ours, but among the region, Malaysia is the worst. Ringgit depreciate is the worst compared to other regional country. Okay, of course, due to overall world economy and of course our local politics also affect the ringgit depreciate. So because our local the issue of this 1MDB, all this not settled yet. That's why the ringgit is because of this local problem, local political problem. This also contribute to the depreciation of this 21.4%. So not only ringgit depreciate, export also drop. Okay, import also drop for the past 8 months in 2015. Okay, so looks like our country now is facing a very huge challenge. Okay, so in 2016 budget, they allocated 267.2 billion compared to the revised 260.7 billion in 2015. Last year we had a revised budget due to the oil price dropped 50%, very significant drop from US 100 ringgit dropped to about 50 ringgit. So last year, so there's a revised budget. So but 2016 budget, the allocation is even higher than the revised budget. And then of this amount, 215.2 billion is for the operating expenditure and 52 billion is for the development expenditure. Okay, let me just explain to you what is the difference for this operating expenditure and development expenditure. Okay, operating expenditure, you can see under operating expenditure 32.7%, which contributes, which is a 70.5 billion is for the emolument. Emolument is what? Emolument is the salary. Okay, so you can see the big chunk of our expenditure, it goes to salary. Salary is our government servant salary, which is very high. That's why we always hear that in the newspaper, or a lot of politicians, they say that, oh, especially the opposition, they say that the government servant, the salaries, the number of government servants is very high. In fact, Malaysia is the number of government servants is extremely high. And also actually the salary is not too high, but the number of government servants is extremely high. So it's operating expenditure is very high. You see the situation is that if let's say your budget, you allocate a lot of expenditure more on operating, okay, compared to development, you can see the ratio is about 82%, 18%, 2014 is 84%, 16%. So which that main portion of the expenditure, it goes to operating expenditure, means that it's not productive. Okay, it's not productive. Okay, let's say you throw money to a development expenditure, then the development will generate income. Take for example, let's say you are doing business. Okay, if let's say you spend money on the machinery, which is development expenditure, the machinery will generate income for you. This is something that will generate income for you. Okay, that's why we call it development expenditure, which will generate more economy growth. This is called development expenditure. Whereas operating expenditure is more fixed, what they call the kind of the expenditure which cannot generate income back. So Malaysia, we all argue, need to reduce the amount in operating expenditure and increase the amount on the development expenditure. This is always the argument, but looks like the ratio is still very high. It's still very high. So it's talking about 80% compared about 20% on the development expenditure. Actually, government should bring down the operating expenditure and bring up the development expenditure. Okay. The official deficit target in 2016 is only 3.1%. Okay, deficit 3.1%. Okay, which before that I just to give you some figure for the past 18 years. Our country every year also face deficit. Okay, deficit means what? Let's say we relate to the business. Let's say I'm sure you guys are running business on your own, or you know what is happening doing business. Okay, let's say you have sales. After sales, you minus off your cost of sales, then become gross profit, right? After gross profit minus off all your expenses, all your salary, all your electrical bill, all these allowances, then it becomes net profit, right? Net profit to the company. In government level, deficit is about the same as net profit. That means every year our country run as a loss for the past 18 years. 18 years. Okay, deficit 3.1%. That means, let's say we put it into easy understand term. That means the next year budget, the government will running a loss of 3.1%. This is for easy understanding. And then government target 2020 target deficit will be 0. That means only 2020 that time, year 2020 the time, then the government is running as a break-even with no gain, no loss. Well, then a question will raise: if every year the government running as a loss, so where is the money that you can cover of these losses? Let's say a company every year running as a loss, sure the cash flow all die off. Okay, or sure all the cash flow gone. So if country, that's why our government debt is increased, because every year we need to depend on borrowing to spend on all the expenditure. Okay, this is situation in Malaysia. That's why our government debt is very high. The figure is about 50% against GDP, and then some people they argue that this percentage is very serious. It looks like a critical level, same like Greece those days. And then that's why some minister before saying that Malaysia could be facing bankruptcy because of this thing, because our debt is very high. Okay, so the Malaysia is expected to expand the growth will be 4.5 to 5.5 GDP growth in 2016. Okay, boosting domestic will be they expect a lot of domestic investment activity will be in 2016, because now foreign fund now is kind of situation, because Malaysia now political and a lot of issues, so a lot of foreign fund they hang on for a while. Okay, except today, yesterday news, except China say they will do some investment to the market, okay, to the market, then which is very good, okay. The inflation rate will be expected to remain 2% to 3% in 2016, okay. A lot of arguments saying that this budget in 2016 budget is over optimistic. So they foresee perhaps the actual scenario won't be that optimistic as the government foresee. Okay, so let us see how. Okay, so some arguments saying that maybe next year government will do another revised budget, you know, to reflect the what they call this the more real picture kind of a situation in the revised budget. Okay, so we have to look and see, okay, whether this argument is true or not. Okay, so in budget 2016, the calculation is based on the crude price. Oil is USD 48 ringgit. So last year there's a revised budget. The calculation is based on about USD 50 ringgit. The 2015 budget, the initial budget, the original budget, the budget is based on the crude oil price of 100 ringgit USD. So this one, the calculation is much better reflect to the actual situation. And then the drop of the crude oil price caused the country income loss of 30 billion. Okay, so but our government is implementing GST. So in fact, I think it's a right decision because after the GST, the collection of the GST, in fact, is to compensate the losses of the 30 billion, which from because of the oil price drop. Malaysia is one of the export oil country due to the crude price oil drop, you know, then our income also drop, and then that's why you can see Petronas dividend to the government also dropped by half. Okay, but luckily GST came in, then GST collection in 2015 is about 27 billion. You can see almost knock off. Okay, one is income loss of 30 B, but 2015 collection is 27 B. So it's just nice to knock off the whole thing. In 2016, expected the GST collection will be 39 billion. Okay, actually in our 11 Malaysia plan, GST collection is only forecast at 31 B. So it's far. Actually, the GST collection is exceeded the budget that the government expect. Okay, initially the government target only 250,000 company register for GST. So then suddenly the figure shot up to 400,000 company, which the government do not expect that so many company register for GST, and 90% that is the submission rate. It means the register, then they really pay, you know. So that's why contribute to the good income for the government. Okay, because of this, initially, if let's say the government figure say that if let's say GST did not come in, then now the initial deficit is 3.1, right? We mentioned just now 3.1 here, 3.1. But if let's say without GST, it would be 4.8. You say without GST take place, the deficit of the country in 2016 will be 4.8%. 4.8%. That means if let's say we want to target 2020 is break even, zero deficit, then if let's say it's 4.8, that means the next few years we have to work very, very hard. That means make it actually make it impossible to become break even in 2020. But 3.1% is still manageable. But let's see, because a lot of people argue that 3.1% is too optimistic. Okay, okay, SST, of course, SST is not as good as GST in terms of collection. SST government revenue is only 21 B. Whenever you'll be collection will be only 18 B. Oh no, 18 B. Sorry, SST. That means the old system, sales tax and service tax, the old system, which GST replaced SST. only contribute 18% to the government, whereas GST 2016 will be 39B, which is very significant difference by 21 billion. Also, it's a good income for the government. A lot of people argue, say that yes, government collect a lot of money, then whether this money goes back to our rakyat, this is another story. So actually, the system is good. So we really, as we all rakyat, we all hope that the implementation, the use of the money is transparent. So this is all what we hope for, right? I think we hope that our government really make use of this the revenue, the good revenue that contributed by us, because GST, I think every one of us is contribute to this GST revenue because we all consumer, we spend, then we contribute GST. So Moody we maintain a country rating because in view of the good GST collection and reduce the country subsidy. Okay, so Moody is the international rating company. So when they rate our company, let's say BBB or even lower rate, then foreign fund cannot come in. Okay, so it's very important then that the Moody rate our country in the good mark. Let's say A or A minus is good mark. Okay, so it's not going to a bad mark. So then the foreign fund can come in. Okay. So so this is opening, you know, the some of the key facts of the overall economy of Malaysia and some impact of the 2016 budget. Okay, so now let's go into the more in detail. Okay, in this budget, okay, there are 5 priority sectors. Okay, they want to concentrate on. So the first one is strengthening economy resilience. Okay. Let me just go into which 5. The 5 priority sector is, number 1 is strengthening economy resilience. Okay, the second one is increasing productivity, innovation, and green technology. The second one. The third one is empowering human capital. The fourth one is advancing Bumiputra agenda. Number 5 is easing the cost of living of rakyat. 5 priority sector, this 5. Okay, so let's go into it one by one. So the first one, strengthening economic resilience. First one, our current government again, okay, concentrate a lot of mega project in infrastructure. Okay, this mega project infrastructure, of course, it will benefit the company or the SME who are doing so-called construction business, okay, development business, okay, transportation business,